Hello guys, good day there. I hope you're doing great and I want to share something small. So I have been having a tough week this week about trades. Market has not been moving. If you can see here, let me show you how the market has been stagnating. So this is gold. This is gold. This is where I read my market from. So when you check at gold, we have these five candlesticks. They are very short. They are very short. They are not very clear. The uptrend was the chart was reversing up, but you see the prices went up and then went low again. You see, this was a consolidation thing. The prices were still, there was no volatility, but it's okay. So today I want to close my week, and as I close my week, I opened a couple of trades to try and see if I can get something. So this is where I am right now. This is where I am. So because I don't know what will happen in the next minutes, what I have to do is to make sure that I move the stop losses. In fact, I had not set the stop because I was here. So I want to move the stops to adjust the stops to where the price can at worst break even with me. So I want to set the stops. Now, this is what you need to do. This is the stop loss. You guys know this is the stop loss. This one is the stop loss. This is take profit. So for me, I don't want to set take profit right now, but I have to be sure that my market is protected, my money is protected. So I want to set my stop loss. The stop loss now this time will have to come on the side where the profitable side, because if I lose, then I if the prices reverses, it will just close my positions on a profit side. Take for example, I opened this trade at 0.63317, and right now the price is at 0.6318, and it was on sale. So if I want to make sure that this trade does not go on a loss even if it closes, I have to bring my price to 0.63317. That is the opening position. That is opening price where I entered the market. But now I will not make any profit there. I will break even. That's what we call break even. So I want to reduce this value so that I make some profit. So I will say 0.63 0.6325 0.6325. If I set my take profit at that point, modify. If I set my take profit at that point, looking at the chart, I will see that the stop loss and take profit, stop loss is below the buying price or the selling price. So which means that even if the price reverses, I will still have to make the profit of around 100 pips or 80 pips. And then I have to adjust all my trades if I'm moving. So I will just do the same. I opened Great British Pound and Australian dollars at 1.745, and this was on buy. So which means that I will have to set my stop loss at somewhere 1.7 1.745. In this case, the price is at 4860. So in this case, I will say 457. 457. At 457, if you look at the chart at 457, this is how it looks. So at least the price, if the price reverses, I will not be even at even point. I will have some profit, but this is too low. I can move it to the previous opening position of the present candlestick. Look here. So I will have to check and say my price can come up to 1745. I want to put it here. I want to put it there. So I will, let me take a line. So if I put it here, I want to put it here. That is 1.74692. 1.74, let me say 747. 1.747. 4747. Let me see that. If you look at that, that is better. We can leave it at that, so that even if it reverses, then I will be able to make some profit. So like this one now, this one is on a loss. I made this trade, but it is not behaving, so I will still have to set a stop loss so that even if it continue going against me, I will still make I will not lose a lot. So I opened at 131.224, and that was on buy. So if it goes to sell, let me risk 20 pips. If I risk 20 pips, I can leave it at that. It was on buy, so 31 will be too close. So we have to do something like 30.8. 30.8, let me see how bad that is, because we are still on the worst side. That is a good stop. That's a good stop, though there are trades that are hunting stop losses. You can move that one a little lower so that you give it a room to play. So let me reduce this just a minute. I want to reduce this to 7. Okay, so this is my chart. That's where my stop is. So I'm looking forward to this chart going up, because that's what I had predicted, only that I had a very bad entry level. I was just testing the market. Now let me see Euro USD. Euro USD, it is behaving. I have to break even with Euro USD, so I change my values. I modify my position 1.07. This will be 1.07. Let me see if I can say 1.07. The current price is 1.070. So I can say 0.7, and then I say it should be 0.75. 0.75. So let me see 0.75. Where is that? Now that's not good enough. I will have to adjust again. If I adjust this, it will be 0.7190. That is a break-even point. Now, because I want to collect some pips, I will say that one to be 1 flat. So if you look at the chart, this is where my stop loss is. Let me zoom a little. That is reasonable. I can leave it at that and leave it to run. Even if it comes back, I'll still be on the profitable side if the stop loss closes it. Now for the gold, it is not yet time to maybe modify too much, but I can wait a little. That does not mean that I don't need a stop loss. I need a stop loss, but even on the other side, I will take 1863.5. 1863.5. Now let me check my chart. 1863.5. Too close. 1863. Let me say 1865. 1865. 1865 is still within the range. Okay. Now I can walk away. So as you can see, the price are still moving, not so fast, but at a reasonable rate. So all these trades will close if they hit my stop losses, so that I don't blow my account and I don't incur so much losses. That is what I wanted to share for tonight. For today, may you have a good and successful trading week and a lovely weekend.